It's Thursday, July 25th. Welcome to MarketFoolery. I'm Chris Hill. Joining me in studio, Jim Mueller, investor at large. Thanks for being here.
Hey, Chris. How are you doing?
I'm good. We've got airlines, we've got automotive, we've got video streaming. We're going to start with the social network. Facebook's second quarter profits came in higher than expected. Daily active users are closing in on 1.6 billion. There's always so many numbers with Facebook. What stood out to you in this quarter?
What stood out to me was the announced settlement with the FCC, actually. And
FCC or FTC?
Which is FTC. I'm sorry, FTC. I always get those academic
US It's understandable. There are a few regulatory bodies that are sniffing around Facebook.
Yeah. So expectations for revenue were about $16.5 billion. Facebook reported 16.9, up about 28% year over year. They beat adjusted earnings guidance estimates by 12 cents, reporting $1.99. 2.7 billion monthly users across its suite of apps. U.S. and Canada daily users up slightly. Europe was flat, about 290 million. But what kind of surprised me was the revenue per user. The average revenue per user was up 18% to over $7 per user. So there's a lot of incentive to get a lot of users onto Facebook's platform, and that's part of the issue.
Well, and as we've talked about before, all you have to do is go to any advertising trade publication, just do a Google search, a news search for, chief marketing officers of major brands, major corporations. Facebook is delivering for advertisers. And when that changes, then I think, I don't want to discount the across the river where there's a number of regulatory bodies that are looking into Facebook. I mean, that is something that is going to have real costs, not just in terms of fines, but in terms of lawyers and staff hours and all of that. I don't want to discount that. But I think that as long as the advertisers are happy with the way Facebook is delivering for them, then this is not a business in trouble.
No, not really. And really, Facebook is, a lot of this is Facebook's own fault. The settlement, the $5 billion settlement, which sounds like a lot of money, and it is, but Facebook brought in $16 billion in revenue in just 3 months. $5 billion payout, they've already set aside $3 billion, and they have almost $50 billion on the books. So it's not going to really hurt them. It's 3.3 months of free cash flow, for goodness sake. But the whole thing was over Facebook breaking previous promises about not doing bad things. And I mean, they've long been turning users into product, and they had promised to stop sharing user data, but they didn't. And they had promised to stop using phone numbers for advertising purposes, and they didn't, and all this other stuff. And so they're kind of shooting themselves in the foot. But as that $7 per user number points out, there's a lot of money driving that kind of behavior. And whether Facebook can pivot to where they can satisfy regulators, satisfy their users about privacy concerns, and still make an equally large amount of money is a big issue for the company, and we're going to have to see how that plays out.
And over the last 2 years, they've done a better job of monetizing Instagram.
Right. Instagram and WhatsApp, and I don't know what all they have. Messenger, or is that the name of it? Their instant messaging app. But yeah, they're gung ho on stories. There's more people turning to stories, and they'll figure out how to monetize that. But I don't have a Facebook account, partly because I don't trust the company, and I think that is a potential issue for the company if they continue to say one thing and do another. I don't know. I don't think that'll destroy the company, but it might make advertisers start looking elsewhere if the company's reputation gets damaged badly enough.
Shares of Tesla are down 13% this morning after Tesla's second quarter loss was bigger than expected. Their revenue was also a little bit light. This has long been one of those businesses that you sort of feel like, well, if the revenue number was higher, then maybe the stock isn't dropping the way it is. But there just seemed like a lot of challenges on a lot of fronts, and as has been the case for a couple of years now with Tesla, the clock is ticking.
Definitely ticking. And okay, I'm going to say up front, I'm actually short Tesla, the company, via options. And I'm not short because I hate Tesla or I hate Musk and I want them to fail and I'm cheering all their troubles. No, I think the company is fundamentally in trouble. And for example, they were ballyhooing the $614 million of free cash flow they'd generated this quarter. But where did that free cash flow come from? Well, they spent CapEx, capital expenditures, investments in equipment and such, less than half of what they depreciated. They're not even spending enough to maintain what they have. And they drew down inventory by some $450 million. That is also not sustainable. And it's not what a growing company needs to do. They need to invest not only to maintain the equipment, but to buy more equipment to keep on growing. And if you're not doing that, you're not going to be a growing company. And then in addition, they have lowered the price of their Model 3s, which is supposed to be the car that is going to drive them forward. Pun intended. But the question is, have they lowered it too much? Have they lowered the cost of making those things at the same rate percentage-wise as they've lowered the selling price? And probably not, because the margin's gone down. And so once you lower the price, it's really hard to raise it back up. And so how are you selling cars for less than they cost to make? And if you are, that's totally not sustainable.
Thank you for sort of going into that level of depth, because I think it's important. Like, look, name me a CEO out there who's more of a sort of hot button leader than Elon Musk. I don't really think there's anyone else out there who people have strong opinions about. And so when you essentially back Musk out of the equation, and we'll get back to him in a second, but when you back him out of the equation and you just look at where is the money going with this business, just put aside whatever you think about Elon Musk and look at what are they doing in terms of spending money? What direction are their margins are going in? All that sort of thing. And you pull back from that and you just see a lot of things that you don't want to see. And I forget which analyst said it this morning. There were a bunch of analyst notes that came out this morning, and I'm paraphrasing here. I think it might have been Morgan Stanley, but it was essentially, there's just not a lot to like in this quarter, and
right.
Referring to a lot of the things that you just referred to.
Right. So they want to launch the Model Y, right, which is the next generation of their car. But that requires production spending ahead of the actual building of the cars, because they have to get the plant to build the Y. And if the Model 3 is using up all their capacity already, and it is, then where are they going to build the Y? And if you lower your free cash flow, if you lower your capital expenditure spending, you're not building plant to build this new Y. And then how can you rely upon the Y coming in and helping the company grow further? So, yeah, there's a lot of questions aside from management and aside from electric cars saving the world and everything else. I mean, aside from all that emotional stuff, just looking at the numbers raises a lot of questions. And
yet, and we'll just wrap up with this, because it's Elon Musk leading the company and his ability in the past to raise money, to pull a rabbit out of the hat, that sort of thing. It's like, this is why I wouldn't short the stock. That's just me. You're a more experienced investor than I am. You're a better investor.
Maybe I'm a stupider investor than you.
You're a better investor than I am, and you're certainly more experienced with options. But it is going to be interesting to see. As I said, the clock is ticking, and I think in the next 3 months, one thing to watch is what conversation is there, if any, about raising money? Whether it's another round.
They did say they felt they were self-sustaining now without having to raise money, but they've said that before too. And one last point I'd like to raise is Elon Musk has lost another one of his long-term lieutenants. Chief Technology Officer J.P. Straubel was announced that he was leaving the company to become an advisor, but that's whatever that means. But he's been there since 2009. 2003, and he's one of the longest-term C-level officers to leave, and that can't help Musk.
Yeah, that's another narrative working against this business. American Airlines' second quarter profits came in higher than expected. They raised guidance for the full fiscal year. That is the 1-2 punch we like to see, and yet the shares of American Airlines are down about 3%. That's not falling through the floor, but I'm only slightly surprised at this.
Yeah, it was a good quarter. Passenger traffic was up, and that's what helped drive out this. And American Airlines raised the bottom end of their guidance. It was a $4 to $6 range, and now it's $4.50 to $6 range per share for the full year. They reported about $12 billion in revenue. Basically matching expectations. That's up a little less than 3%. They beat EPS guidance expectations by 3 cents. Their net income level of $662 million was up almost 19% year over year. Traffic was higher. The term is passenger load factor. It's basically how many people are in the seats of all possible seats that they have. And that's 86.6%. That's up 3.8% year over year. And that's really what was driving this. And then they have another metric. Well, I won't go into that. It's getting a little too far into the weeds. But basically, they've seen 11 straight quarters of revenue per this metric of improvement, and that's pretty good. That doesn't happen very often. But what's hurting the company and still has a lot of uncertainty, and which might be playing into the share price drop this morning, is that the 737 MAX continues to be sitting on the tarmac, not doing its job of flying people around the country and around the world. The airline has 24 in its fleet and was supposed to get 7 more this quarter, about 10% or 9% of their order book of 76. But not being able to fly them hurt them to the tune of about $175 million in pre-tax income this quarter. And that is about 17% of what they would have earned if the MAX was flying. And for the full year, $400 million they're not getting, and that hurts.
This really is obviously the story of the airline industry in 2019. I think at the end of the year, when we do our look back show, I think this is going to be one of the dominant storylines of 2019 is the Boeing 737 MAX. I was watching an interview this morning. Southwest Airlines also reported this morning. Southwest has more 737 MAXs in their fleet, which means they have more grounded.
Yeah.
It's a greater impact. Gary Kelly, the CEO at Southwest, was doing a very nice job, a very polite job of holding in his frustration. But he is clearly very frustrated. If you just read a transcript of what he's, when he's saying things like, we're not happy about this. And it's been interesting to watch over the last 6 months, CEOs like Gary Kelly and others go from, in the immediate aftermath of the second 737 MAX crash, statements of support of Boeing, trust in Boeing, and they are all starting to back away. Very slowly, they're all starting to back away, and there's no reason for them to publicly negotiate with Boeing, but you have to believe that behind closed doors.
Oh, there's loud voices, I'm sure.
Loud voices, possibly some profanity, and essentially, as we've said for a while now, the longer this drags on, the greater the ability of airlines in the United States to say to Boeing some version of, what are you going to do to make me stop from going over to Airbus and taking my business there?
Yeah, and it's going to continue for a few more months at least. I mean, I looked up what Boeing was saying, and they're just released earlier this week, and they're saying, we're still working with the FAA and other regulators. I got that one right, FAA. We're still working with the FAA and other regulators around the world to make sure all the certifications and the software upgrades and everything meets what everyone's asking for. And they expect to submit their final package sometime in September, which could slip if the regulators say, no, you need to fix this, you need to look at that, and so on. And that just makes it push further out in the year. And they're saying they might be able to get the grounding lifted as early as early Q4, calendar Q4 this year, which puts it in October, November range. But so that means many more months, 3, 4, 5 more months of airlines losing money by not being able to fly those planes.
Well, the good news for airlines, I guess, is that not a lot of people travel in November and December.
Yeah, right.
Quick shout out to our man Willie down in Norfolk, Virginia. Hang in there, Willie. Also, shout out to our man behind the glass. Well, our man behind the glass is producer Dan Boyd, producer extraordinaire. But joining him today, also one of our members, Desmond Walker, hanging out with us. Desmond, thank you so much for being here. Real quick before we wrap up, I said the other day, this is my favorite week of the year, and it happens 4 times a year because so many companies are reporting. Comcast came out with their second quarter report, and I was struck not necessarily by their results, but by the fact that Comcast, which owns NBC Universal, they said April 2020, that's when the NBC streaming service is going to launch. They provided virtually no other details beyond that, and I don't blame them. But I'm curious because you're someone who keeps a close eye on the streaming video industry.
Right.
And I said this to you this morning. It's really turning into a rock fight right now. I mean, there are just more companies coming out. There's what do you see when you look at streaming right now?
I don't think the rocks being thrown around are very big.
Okay,
at least against the 3 giants. Okay, so. Last month, I went up to New York overnight to attend the Kagan Media Summit for 2019, and they presented a really interesting chart of the streamers. Okay, if you put out a bar chart of the streaming channels out there, Netflix, Amazon, WWE, all of them, you've got 3 big ones for the U.S. Okay, Amazon about 63 million, bar this I don't know, 2 feet wide. For our non-visually...
I was going to say, it's an audio podcast,
yes,
right?
I know. I just remembered that. Netflix, pretty close at 58 million in the U.S. Hulu, about 23 million, so about half the other 2. And then you have to kind of squint to see everything else. HBO Now is the biggest at a little over 6 million, 1/10 of what Amazon has. And then it goes down from there. Showtime, 4 million. CBS All Access, 4 million. Stars, 3.5. Crunchyroll, an anime one, favorite of mine and my wife's, 1.5. WWE.
I'm sorry, Crunchyroll?
Crunchyroll, yeah.
Okay.
Anime. It's good stuff.
No, I know what anime is. I've just never heard of Crunchyroll, but go on.
Now you have. And WWE Network, 1 million. And they have even smaller ones. And so there's a lot of little ones out there and a few big giants. And NBC Universal, they're going to get The Office when the deal with Netflix expires at the end of 2020, which means, listeners, if our dozens of listeners, you have another 18 months to binge it on Netflix. But that's the story in the news. The Office is leaving. Netflix is going down in flames.
Friends too.
Big deal. That's Reed Hastings' response pretty much, because they have a lot of other content they feel is good enough to keep people coming in, and that is what's really driving everything. Who has content you want to watch? Will NBC Universal have, they'll have The Office, of course, but they also said they're going to have to get a lot of third-party content, at least at the start, to fill the streaming pipes.
Promise me you're going to go to this same event in a year, because in a year they will presumably present data that includes Disney Plus, Apple TV Plus. We will by then know what NBC's plan is for their streaming service. They will have launched by then, or at least that's their plan.
Right.
Good luck to them if they haven't launched by them. So we'll have more information. No, and I agree with you. I mean, I think the concerns for Netflix in the short term are being overblown. I think that if you look out over the next 5 to 10 years, that's where the greater risk lies.
There's going to be several winners, big winners, quite a handful of smaller winners, and quite possibly a fair amount of consolidation once it all shakes out, and the cost of running a streaming service and paying for all the content and not being able to make it up on the revenue. I mean, their Disney Plus, they expect to lose money on Disney Plus for several years, but they have everything else Disney does to support that. That's what Netflix did when they did the streaming. They had the DVD by mail business. Remember that? That was a big cash cow for them, and they used that to support their streaming. And then once they got the streaming going, and it's now profitable in the U.S. and Canada, and they would use that profitability to support the next launch. And that's what and NBC Universal, Comcast is going to have to support whatever they're calling it, Universal. I don't know. Did they give a name? I
want to say it's NBC Universal Plus, but I could be wrong about that. Everyone's adding a plus. I'm assuming there's a plus in there somewhere.
Sounds good. But they're going to have to suffer through 1, 2, 3 years of not making money before they can make money off of just the streaming service. And if you don't have the backing of something else to support you, you're not going to make it very far, and you'll be gobbled up by somebody else. And even if you do, if it's really small and you only have like 1 million members, you might be gobbled up.
It's going to be fun to watch.
Oh, yeah.
Jim Mueller, thanks for being here. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. That's going to do it for this edition of Market Foolery. The show's mixed by Dan Boyd. I'm Chris Hill. Thanks for listening. We'll see you on Monday.